Welcome all of you to this online workshop on how to earn money in trading using Dynamic Live. Now earlier in the webinar you must have seen the different intelligence at work in this Dynamic Live, which makes sure that we always get the right entry and right exit. But as far as using this Dynamic Live is concerned, it is made so very easy that it is a matter of just 1, 2, 3 easy steps. And first step being select your favorite stock by clicking on this favorites, and then just come and look at the Dowmatic Method action information, and whatever it tells you based on that, just place orders and start trading. So this is how easy it is today. But then before we start the session today, in this session we are going to learn things in a bit more detail, because when it comes to practical trading, now how do you go about trading, and what are the points that you have to keep in your mind while trading? And there are a few basics that you have to learn before we start the actual subject here. So to start with, first once you have subscribed and once your Dynamic Live is installed, and when you open it, this is how it is going to look. And in this Dynamic Live, whichever favorite stock or index that you add, you are able to see two different charts on the screen. One on your right side, we call it as the intra-week chart. The other on the left side, we call it as the intraday chart. And in both these charts, you can see here there is a line here, we call this as the long signal. If you are looking at the long signal in the intra-week chart, we call it as intra-week long signal. If you are looking at the long signal in intraday chart, we call it as intraday 3 long signal, or in short, we can call it as ID3 long signal. Now, there are three most important basics that you have to learn here. Now, these 3 points, we will make use of it at the later part in the session. Now, what are these 3 things? First thing, you can see here that this long signal can change its color from green to red, from red to green. So whenever it turns green, it means it is telling you that the trend is up now. The price movement, the trend has got into an uptrend. Now similarly, when the long signal turns red, now you can it means that the price is now in a downtrend. So just by looking at the color of the long signal, you will be able to understand whether the price is in a clear uptrend or in a downtrend. The second most important thing here is the zigzag cautions. Let me zoom in a bit. Yes, so as you can see here, there is a green colored small symbol here. Now we call this as a zigzag caution. Similarly, if the same symbol appears on top, it will be red in color. It is visible in the intra-week chart. Yes, in the intra-week chart, there is a small red colored symbol here. Now we call it as a zigzag caution. Now whenever a zigzag caution appears, it means the price can reverse. Okay, so normally when a zigzag caution appears, we try to exit our position. Now what to do and all these things, we will discuss this in the later part of the session. But then, which is a zigzag caution, how to understand it? Now this is what you have to see here. So there may be a question that comes up when you start trading, because there seems to be so many symbols. Now which is a zigzag symbol? Now there's a question that you may come across. But then for that, you have to understand, whenever any symbol appears in the chart, now what you can do is you can immediately come and look at what is written in the reason. In the reason, it will be very clearly written as ID3 zigzag, or intraday 3 or intra-week zigzag. So wherever the zigzag appears, if it appears in the intraday chart, it will be written as ID3 zigzag. If the zigzag appears in the intra-week chart, then it will be written as intra-week zigzag. So by this, you will know whether the symbol is a zigzag caution or not. And then the third and last important thing here is the long signal edge point. Now let me zoom out a bit. Yes, as you can see here, once this long signal got into an uptrend, in an uptrend the price started moving up, but later at some point it started decreasing, and it came very close to the long signal. Again it reversed, again it came down and it touched the long signal. The point wherever the price comes closer to the long signal, or whenever the price touches the long signal, these are the points we call it as long signal edge points. Remember, whenever the price comes closer or touches the long signal, we call it as long signal edge point. Even in that case, when the price comes closer to the long signal, what you can do here is you can come look at the reason here. In the reason, it will be very clearly written as ID3 long signal edge, or intra-week long signal edge. So by this, very easily you will understand whether it is a edge point or not. Normally when the price reaches a edge point, there are chances it can reverse. So the temporary price reversals are identified by this long signal edge points also, along with the zigzag cautions. So these are the three basic things that you have to know before we start understanding the method. Now let us move on to the method on when to buy and when to sell. Now before we move on, let me tell you one very important thing here. Now whatever is discussed in the method now, in this session, whatever is discussed, it is discussed in a very defined procedure. Now all that you have to do, if you can implement your trading in the same procedure, that is more than enough. And whatever points are included in this procedure, if you can look at only those points, that is more than enough. You don't have to consider looking anything more than that. Okay, so let us start understanding it. As it is told, it is a matter of 1 to 3 easy steps. The first step being, just click on this favorite to select your favorite stock or index, and once you do that, just check the Dowmatic method action information to start trading. Now in this action information, there will be certain very clear instructions that you will come across. Now what are the instructions? Let me tell you. Now today at this point in time, let us say it was very clearly written as buy call option now. So whenever the price, whenever the dynamic live feels that the price is going to increase, then it will be written as buy call option now. You can buy a call option. Later it is written as hold call option. So hold the call option that you have bought, and at some point it will be written as exit call option now in the same place. That is when you can go ahead and exit the trade. So when to enter, how long to hold, and when to exit, complete information will be given here. Your job is to just follow it. Similarly, if the price starts decreasing, as it did here, if the price starts decreasing, it will be very clearly written here as buy put option now. Later it will tell you hold put option, and finally at some point it will be written as exit put option now. So both in an uptrending market and in a downtrending market, it will guide you to trade. Your job is to just follow whatever it tells you to do. Now apart from this, what else are we going to do? There are just few things that we have to do. First thing is, along with this, first thing, we are going to follow it as it is, no changes. But then along with this, there are certain points, places in the price movement where we may have to secure our profits, right? How to secure our profit, this is one thing that you have to learn. And then later we will also see, whenever it gives us an entry, either to buy a call option or to buy a put option, there are places where we have to check whether to do this trade or not to do this trade. This decision making is another important process. This is all that we are going to do in this whole process. Okay, so let us start understanding it one by one. First step is, whenever it tells you to buy a call option or a put option, there's one important thing that you have to do. As it is told in the webinar, you have to select the right strike price. So when it tells you to buy a call option, then you can come look at this pyramid pointing upward, pick one number out of these three, that is your right strike price. Similarly, when the action tells you to buy a put option, you can come look at this pyramid pointing downward, pick one number out of these three, that is your right strike price. So this is how you decide the right strike price. Now once you have selected the right strike price, your job is just go ahead and do the trade. Just execute the trade. Now executing the trade, you can execute it through your online trading terminal by yourself, or you can do it by your mobile trading apps by yourself. Or if you don't know how to operate them, the best thing that you have to do is just make a phone call to your stockbroker and give the instruction. They will place the order for you. Now how to do that, we have discussed that in the webinar also, right? So when it comes to selecting the right strike price out of these three, which is the one we have to select? Now that is a question you have to understand. Whenever you trade in an index like Nifty, Bank Nifty, or even if you trade in a stock, there are monthly contracts available for you to trade. Excuse me. So monthly contract means these are the option contracts which has 1 month period, 1 month duration, or 1 month validity. It expires on the last Thursday of every month. So when you know that it has 1 month validity, now what you can do is you can split that month into 3 parts. The first part you can call it as the beginning of the month. The second part you can call it as the middle of the month. And the third part you can call it as the end of the month. This is how you split it up. And in the beginning of the month, if it tells you to buy a call option or a put option, it is better you always trade the OTM strike price mentioned here. And in the middle of the month, if it tells you to buy a call option or a put option, you can trade the ATM strike price. And at the end of the month, if it tells you to buy a call option or a put option, you can trade only the ITM strike price. So this is how you select the right strike price to do the trade. But then when you come and trade the index options like Nifty and Bank Nifty, along with the monthly contracts, we also have weekly option contracts available for us to trade. Now, how do we trade the weekly options? Now, first thing, you know that the weekly option starts on a Friday, expires the very next week, Thursday. It has only 1 week validity. So if you want your trading to be very peaceful without any confusion, if you want to trade there, it is better you trade only the ITM strike price throughout the week. Got it? Now, over a period of experience, you will understand when to go for the ATM or when to go for the OTM strike price. But until then, you can stick on to the ITM strike price. So all that you're trying to do here is, whenever it tells you to buy a call option or a put option, as in this case, today it said buy call option now. So what we do here is, if you're trading in a weekly option, we just trade the ITM strike price. Or if you're trading in the monthly option, you have to check the date. Today's date is 7th July. So by looking at the date, you will be able to understand, are we in the beginning of the month or at the middle of the month or at the end of the month? Based on that, you select the right strike price. Now, once you selected the right strike price, go ahead and do the trade. And once you enter into a trade, wait until it is very clearly written as exit call option now or exit put option now. So until it tells you to do so, you just have to wait there and hold your position. And once it tells you, that's where you can go ahead and exit your trade. Got it? So this is all that you're going to do. But then along with this, there is one more thing that you have to do, and that is to secure your profits. Now, how to secure your profit? Let me give you a small example here. Now, at this point today, it was very clearly written as buy call option now. So once it said buy call option now, we bought a call option. Now I bought a call option. I bought a 22,800 strike price call option at around 140 rupees premium. Now after buying this call option, what happened was the price started increasing. When the price reached around 22,500 ranges, this symbol appeared. Now once we take a trade and when you're holding on to it, now these kind of symbols will keep appearing in the intra-week chart. Now these symbols could be a dynamic system caution or a DMBOTS, but whatever it is, any symbol appears in the intra-week chart, then it means you are supposed to secure your profits. So as I told you, when the price of Bank Nifty reached around 22,500, that is where the symbol started appearing. Now at this point, we knew that we had to secure our profit. So in order to do that, when we looked at the premium was already trading at almost 190 rupees. 190 and close to 200 rupees. So in order to secure our profits, what we did here is, initially we have bought it at 140. Now we exited at around 200. Now once we exited at 200, now what is happening here? We got 60 points profit. Plus our initial capital is also back. But then the action was still telling us to hold the call option. So what we did here is, now we went ahead and we bought another call option with a different strike price. So let us say I bought a 23,000 strike price call option. I bought it at 133 rupees premium, 33 or 36 if I'm not wrong. So 136 rupees premium. So first trade was bought at 140, sold at 200, and then we got 60 points profit here. And then another call option is bought at 136 rupees premium. So from my initial capital, if you see, initial capital was 140 points where we invested, and now my capital is 136 points. So there the capital has slightly reduced, plus we have also got additional profit of 60 points. So my risk on this particular trade now is very less, because I've already secured 60 points profit also. Right? So this is how we do it. This is how we secure our profits. Now this process, we call it as shift over. This is very, very important as far as trading in options is concerned. Time and again, we have to secure our profits in order to be on the right side. If in case you don't secure your profit, there are times where you buy an option, you see very good profit, but by the time you get an exit, before that the premium would have already started melting because of the time value there. So shifting over is very, very important, and this is how we do it. So we are shifting our position from one strike price to another strike price. The action has not told us to exit. It is still telling us to hold the call option. But since a symbol here appeared, as I told you, any symbol appears, we have to secure our profits. So in order to do that, we shift our position from one strike price to another strike price. During this process, whatever profits that we have earned, part of the profit we can reinvest. In some cases, we buy it at 140. By the time we exit, it is at around 400 rupees where we exit, or 500 rupees premium. So we've got a very big profit here. Now part of the profit can be reinvested, or in this case, as the profit was a bit smaller, so part of the initial capital is invested so that the risk reduces in order for us to trade very safe. So this is how you secure your profit. Now after we have secured our profit, now currently I'm holding on to a 23,000 strike price call option. Now I will hold on to this call option until it is very clearly written here as exit call option. Now only when it tells us to do so, that is when we are going to exit the trade. Got it? And if in case this symbol appeared on an expiry date or one day before the expiry date, in such a case we can shift over our position directly to the next contract. So there is an additional thing that you have to remember. So this is all that you're going to do. Whatever the action tells you to do, just do it by selecting the right strike price, and then any symbol appears, secure your profit. After that, wait until it very clearly tells you to exit the option. So this is all that you have to do. And in order to do this, first decide what is your capital. Whatever is your capital, based on that, decide one quality stock, select one quality stock or an index. Trade the same script for one entire month. Now that is the easiest way to trade, rather than trading multiple scripts every day. So once you have done that, and you just make sure that you implement this points that we have discussed till now continuously, mechanically, for one entire month. When you implement it mechanically for one entire month, then what will happen is eventually we expect you to earn a minimum of 10 to 15% returns at least per month. This much at least can be earned if you can implement it mechanically throughout the month. But when you are implementing it throughout the month, you will come across a lot of trades in a month. In all these trades, you will start seeing results like gain, gain, minus, minus, gain, gain, minus, minus, gain, gain. Or it may start off like minus, minus, gain, gain, minus, minus, gain, gain, gain. Whatever happens, end of the thing, everything will total up some, to a bigger gain. And that gain will be a minimum of 10 to 15% returns per month. But then there are months where it has given you more returns also. But just make sure that you implement it mechanically without stopping anywhere, without panicking anywhere. But it so happens that when people see a couple of minus trade, there are people who panic. They stop trading, they change, they shift, they try to do all possible things. But let me tell you, if in case you know that you panic here and there, then the right way to trade here is to follow some discipline. We call this discipline as money management. So how to do money management? It is a very simple process. Decide what is your capital first. Whatever is your capital, if you want your trading to be very peaceful throughout the month, throughout the year, then whatever is your capital, utilize only 10% of your capital per trade. So let us assume I have a lakh rupees capital, so I utilize only 10%, that is around 10,000 rupees, right? So in this particular trade, I bought a call option at a 140 rupees premium. So the investment required here is close to, it is 2,800 rupees investment required per lot. But since I have a lakh rupees capital, my allocation is 10%, that is 10,000. So for 10,000, I will be able to trade 4 lots, not 4 lots, 3 lots, isn't it? So in this particular trade, I could have traded 3 lots. And when it is time for me to shift over, I could have shifted over again the same 3 lots. So this is how you decide the number of lots based on your allocation. And the allocation is decided based on your overall capital. So this is the basic step, and it will start giving you very good results provided you implement it for one entire month. Now when you start implementing it over a period of time, you will start understanding that now earning 10-15% returns has become very easy. Now it has become a habit. And is there anything more that we can do to earn more returns? When that is the case, what you can do here is you can move on to the next stage. But then before that, let me tell you, this dynamic live is designed for something bigger. Some advanced trading concepts can be implemented with the help of this dynamic live. But then today we are discussing about the Dowmatic method level 2. And in this Dowmatic method, whatever we have discussed till now, to this, if we add a few points, then what will happen is it will enhance our returns. So we will discuss two more additional steps here. So what is the second step? Let us see here. Whenever the action tells us to buy a call option or a put option, before we do the trade, we have to check this intraday 3 long signal, and we have to check this intra-week long signal. So how to do this? Let's understand here. So at this point in time today, as I told you, it was very clearly written as buy call option now. So when it said buy call option now, we checked intraday 3 long. It was green in color. We checked intra-week long. This was also green in color. So if they both are green in color, it means they both are telling us that the price is in an uptrend. In an uptrend, if you're planning to buy a call option, now it means you are trading in favor of the trend, isn't it? So there is no need to think, no guessing, just go ahead and do the trade because you are in favor of the trend. But at the same time, here today, at this point, it was very clearly written early morning that buy put option now. So when it said buy put option, we looked at the intraday 3 long signal, it was green. Intra-week long signal was also green. It means they both are telling us that the trend is up. In an uptrend, if you're planning to buy a put option, it means that you are going against the trend, isn't it? Put option, normally we trade, it will be very useful if we trade a put option in a downtrend. But in an uptrend, if you're planning to buy a put option, it means you're going against the trend. In some cases, as in this case, it told us to buy a put option, intraday 3 long and intra-week long, both were against, both were saying uptrend, isn't it? But in some cases, one long signal will be green in color, the other will be red in color, but it doesn't matter. Even if any one of the long signal is against your trade, it means your trade is against the trend. So whenever your trade is against the trend, whichever script that you are trading here, in this case we are looking at Bank Nifty, so whichever script that you are trading in, go check some other script which can have an impact on the script that you are trading. Like for example, if you are trading in Bank Nifty, go and check what is happening in Nifty, because any major movement in Nifty can directly have an impact on Bank Nifty price movement, isn't it? So this process, when you're trading in Bank Nifty, going and checking Nifty, or if you're trading in Nifty, then you can come and check Bank Nifty. So this process, we call it as Tenkai signal. When you're trading in one script, going and checking some other script to take a decision here, this process we call it as Tenkai signal. So in this case, now when it said buy put option now, intraday 3 long and intra-week long both were not supporting. Both of them were saying that this trade is against the trend. So we check the Tenkai signal, that is we go check Nifty. So in Nifty, what do we check? We will check only for two things. When Bank Nifty said buy put option now, at the same time in Nifty, is there any zigzag caution or is there any long signal edge point? These are the only two things that we will check for. And if any one of these two is visible, then we will avoid this trade. We will not do this trade in Bank Nifty. We can completely avoid this trade. Okay, but when the Bank Nifty said buy put option, when we knew that it is against the trend, and when we check the Tenkai signal, that is in Nifty, if there is no zigzag or if there is no long signal edge point, then we will go ahead and do the trade even if the trade is against the trend. Got it? So this is how we will trade as per the second step. This is all that we are going to do in the second step. So let us take this example and see what has happened here. So when did it tell us to buy a put option here? Let us note down the time and date. It was 7th July at around 9:30 in the morning. So when it said buy put option now we know that it is against the trend. So we will check Nifty, and Nifty 9:30 in the morning today, what was happening exactly at the same time. Let us check it. I will zoom in a bit so that we can see things very clearly. So this is what is 9:30. This is the time at 9:30. You can see here. This is a point. Now at 9:30 in Nifty, is there any zigzag? No, there is no zigzag symbol at the bottom. There is nothing. Is there any long signal edge point? No, the price is not closer to the long signal, or nor it is touching the long signal. No, there is no long signal edge point. But you must also check the intra-week chart also. So at the morning, is there any zigzag? No, there is no zigzag. Is there any long signal edge point? No, there is no long signal edge point. So both zigzag is not there and long signal edge point is also not there. So for that reason, we will go ahead and we will do the trade. So when Bank Nifty said buy put option now, today morning at 9:30, at this point, we checked the Tenkai signal and there was no zigzag, there was no long signal edge point. We went ahead and we did the trade. After we did the trade, some point later, it was very clearly written here as exit call option now, sorry, exit put option now. So we exited the trade. So the trade got over. This trade was almost a cost to cost trade, but still we were able to exit it very early. And after that, the price started moving up. Similarly, you can check the same case in Nifty also. If in case you are trading in Nifty, then which is your Tenkai signal? Then Bank Nifty itself can act as your Tenkai signal because financial services sector has the highest weightage in under Nifty. So Bank Nifty belongs to that sector, and any major movement in Bank Nifty can also have a direct impact on Nifty. So at this point in time, when Nifty intraday 3-speed signal gave a sell, the action was very clearly written as buy put option now. So when it said buy put option now, we checked intraday 3 long, it was green, intra-week long was also green. So they both were not supporting, so this trade was against the trend. So when it was against the trend, now we have to check the Tenkai signal. Now when did it tell us to buy the put option? It was at 11:30 in the morning today. So at 11:30 in the morning, what was happening in the Bank Nifty? So at 11:30 in the morning, the Bank Nifty price was somewhere here. So when the Bank Nifty price was somewhere here, it was so very close to the long signal that in the reason here, it was very clearly written as ID3 long signal edge. Since it's said there is an edge point in Bank Nifty, what we did was we avoided the trade in Nifty. We did not do the trade. So this trade we did not do it just because this trade, first of all, it was against the trend. Since it was against the trend, we checked the Tenkai signal, and in Tenkai signal there was a long signal edge point in Bank Nifty. So since it was not supporting, there was a blockage at the bottom, so we avoided the trade. And later you can see here the price has started reversing. If in case you did not check this Tenkai signal, and if you had done this trade, if you had bought a put option, eventually this trade would have ended up being a minus trade. But then anyways, later at some point it told us to exit the put option here itself. But before that itself, we have not done the trade at all in the first place, right? So this is what we do in the second step. So before you do any trade, whenever it gives you a trading opportunity, check intraday 3 long and intra-week long signal to see if they both are supporting. If they both are supporting, then go ahead and do the trade. If any one of these two long signal is not supporting, in that case, check the Tenkai signal to decide whether to do this trade or not to do this trade. So what do you check in Tenkai signal? Check if there is any zigzag or long signal edge point. If it is there, then avoid the trade. If it is not there, then go ahead and do the trade. This is all that we do in the second step. So in comparison to the first step, in the second step, you will see that in one entire month, the number of trades will reduce compared to the first step because there will be many trades that you will avoid looking at these factors. When you avoid, most of the trades that you have avoided, eventually they would have ended up being a minus trade. But then since you have avoided them, you have successfully reduced the number of minus trade. If you reduce the number of minus trade, automatically the balance will increase. The profits will also increase, isn't it? So if you can implement the second step mechanically for one entire month, then we expect you to earn a minimum of 20 to 25% returns. So the returns will start increasing from this step here. Okay, and then once you start implementing it over a period of time, when this also becomes a habit, now that is when you will start thinking, is there anything more that we can do? At this point, we will move on to the third and final step that we can follow here. Now for that, all that we do here, it is very simple. If you have understood the second step very clearly, then third step is very, very easy. All that we are going to do here is, whenever the action tells us to buy a call option or a put option here, Before we do the trade, we will check intraday 3 long signal. We will check intra-week long signal as we did it in the second step, same thing. But along with this, we will check one more thing, one additional thing you have to check, and that is dynamic system. Now, what is dynamic system? Dynamic system is another software like this Dynamic Live. It also gives you the right entry, right exit automatically. But then using dynamic system, we do positional trading. Dynamic Live, we make use of it in order to do more of a short-term trading for regular month-on-month income. But then for dynamic system, we do positional trading in order to earn year after year income. Got it? So how to do positional trading using dynamic system? There is a very clearly defined method. We call it as the dynamic system level 2 trading method. Now, what is the method? Now, there is a small training video on this method. Where to find it? I will show you very shortly at the end of the session now. But then once you watch that video and once you understand the method, all that you must check every day here is, as per dynamic system level 2 trading method, what is the current position? Are we supposed to be holding a long position or are we supposed to be holding a short position in the script? So that is all that you're going to check here. So let us take this Bank Nifty once again. So in this case, as I told you, it was very clearly written as buy call option now. So when it said buy call option now, we checked intraday 3 long signal, it was green in color. We checked intra-week long signal, this was also green. It means they both are supporting. And then we checked the dynamic system level 2 trading method. As per that, we saw that we were supposed to be holding on to a long position. So all three of them are pointing upward. All three of them are supporting you to hold a long position. The trend is up. So you are planning to buy a call option. So your trade is in favor of the trend. So no thinking, no guessing, just go ahead and do the trade. Just do the trade. Got it? But then in this case, when it said buy put option now in Bank Nifty, we checked intraday 3 long, it was green, it was not supporting. We checked intra-week long, it was also green, it was also not supporting. We checked the dynamic system level 2 trading method. As per that, we were supposed to be holding a long position. So that is also not supporting because you're planning to buy a put option here. Got it? So since all three of them are not supporting your trade, in some cases, two of these are supporting and one is not supporting. Let us say intraday 3 long and intra-week long may be supporting, but dynamic system is not supporting. But remember, if any one of these three does not support your trade, it means your trade is against the trend. So since your trade is against the trend, before you do the trade, check the Tenkai signal to decide whether to do this trade or not to do this trade. So in this trade, as we saw that this trade is against the trend, we had to check the Tenkai signal. But even when we checked the Tenkai signal, that is a Nifty, there was no zigzag, there was no long signal edge point. So we went ahead and we did the trade. Even if the trade is against the trend, we did the trade and we exited it very soon. But then many times when you check the Tenkai signal, there may be a zigzag or a long signal edge point, because of which you will avoid the trade, as it happened in Nifty today. Let us check Nifty once again. So in Nifty at this point, when it said buy put option now, intraday 3 long signal was green, it was not supporting. Intra-week long signal was also green, it was also not supporting. As per dynamic system, we are still supposed to be holding on to a long position, so that is also not supporting. So all three of them, since they were not supporting, we had to check the Tenkai signal. When we checked the Tenkai signal, Bank Nifty, there was a long signal edge point, because of which we avoided this trade. Okay, so this is all that you do in the third step. If you can do this, then what will happen is this third step will help you reduce the number of minus trade even further compared to the second step. So since the number of minus trade reduces completely in the third step, there will be certain months in a year you may see that there are literally 0 minus trade if you're trading in as per the third step throughout the month. So by implementing this third step mechanically throughout the month, you will be able to earn a minimum of 30 to 40% returns at least. This much returns can at least be expected. There are months where it gives you more, but this much at least can be expected, provided you implement it mechanically. Got it? So this is all that we have to learn here. So as it is discussed now in this session, I hope you people have made a note of it, or you have observed it very keenly, or even if you have missed out some point, if anyone joined a bit late, you don't have to worry. The recording of the session will be made available in our YouTube channel, or I will show you our members area now, where you will find the recording, and there you can go watch it a few times before you start trading, so that you are very clear before you start trading when are you supposed to trade, when are you not supposed to trade. Okay, so this is what you have to do. But then in order to complete this third step, there is one last point that I must convey, and for me to convey this, I have to open a dynamic system and show you a daily chart of any script. So let us check dynamic system. So this dynamic system here, in this dynamic system, now how to open a chart, what is all these things you will learn it in the training video related to dynamic system. But then this is a daily chart of which is the script. This is Bank Nifty that we are looking at. Now this is the price movement. You are able to see every day's price movement here. Now along with this, there are three lines that you can see here. One is a black line, we call it as speed trend. Second one is a green line, we can call it as mid trend. The third one is a purple line, we call it as long trend. So these are the three trends, three studies that I've added here. How to add them, that is also explained in the video, training video. But then whenever the price is trading above all the three trends, it means it is in a clear uptrend. The price of this particular script is in a very clear uptrend. There are times where the price is trading clearly below all the three trends, then it is in a clear downtrend. So when the price is in an uptrend or in a downtrend, just by looking at this, you will be able to understand. But in the meantime, there are times when the price is trading between the three trends. Whenever the price trades between the three trends, this is the phase we call it as in-between trends. We call them as in-between trends. So whichever stock or index that you are trading, and if it is an in-between trend as per the dynamic system daily chart, then whatever trading opportunity you get here, either to buy a call option or a put option, then you must check the Tenkai signal for all the trades. If it is an in-between trend, then check the Tenkai signal for all the trades until it is an in-between trends. There are times where it remains an in-between trends for weeks together. So in such a case, for every trade, you must check the Tenkai signal to decide whether to do the trade or not to do the trade. Got it? So this is all that you have to do in the third step. This is all about today's session. Now for you to go check the training videos related to dynamic system and training videos related to today's session. Now let me show you where to find it. Now there are some of you who have always been requesting me to do the session in Hindi or in Kannada or in any other language. But let me tell you, there are training videos made available in multiple languages. Where to find them? For that, you have to log into our members area. To log into our member official website, that is dynamiclive.in. So let me open it. So here the website, it is to open, just hold on. Yes, so this is the official website, dynamiclive.in. In this you can see here in the menu it is written as members area. Now just click on this members area. Once you click on it, now what will happen is it will ask you for your email ID and password. Now use your email ID that you have given for while subscribing, and once you have subscribed, you will be provided a password to log into this members area. And remember, you get a lifetime access to this members area. And in the menu, once again, inside the members area, you will find this training 2020. Click on it. So once you do that, these are all the different reference training videos that will be available for you. Now, if anyone wants to learn about dynamic system to start from the scratch, this is the first video I would suggest you people to watch. And this is dynamic system basic navigation. Got it? Watch this video to understand how to open a chart, how to add all those studies that I have shown you, and how to see a report, what is there inside dynamic system, how to understand them. All these basic things are very clearly explained here. And after that, scroll it down a bit further. Once you scroll it down, here you can see the dynamic system level 2 trading method. So this is the positional trading method that I was talking about. But before you watch this, watch the level 1 trading method first, and then you can watch the level 2 trading method. then it becomes very easy for you to learn and understand this. So these are the 3 videos related to dynamic system. Now once you have watched these videos, you can scroll it down a bit, and if any one of you watching this session is a beginner to options, if you want to know more, then you can watch this video, Option Basics for Beginners, to learn more about it. And after that, scroll it down even further, and this is one video I would like you people to watch, that is Options Trading and Money Management for Beginners. So in this video, how to select the right strike price, how to shift over to secure your profits, how to do money management in options trading, all these points are very clearly explained. And as you can see, it is already available in 4 different languages: English, Hindi, Kannada and Tamil. You can watch any one of the video which comforts you. And then the next one is the Dowmatic Method. Today we discuss the first basic step which can fetch you around 10 to 15% minimum returns. That concept is very clearly explained in this video. Go watch it at your leisure time. And after that, the last video that you can see here, Dowmatic Method and Tenkai Signal. This is the second and third step that we discussed today, that can be very easily understood if you can watch this video. And as I was telling you, if you're trading in Bank Nifty, then Nifty will act as your Tenkai signal. If you're trading in Nifty, then Bank Nifty will act as your Tenkai signal. So if you're trading in any stock, then which is your Tenkai signal, how to identify it, where to go check it. Now all these details are very clearly explained in this video. Please do watch it before you start trading. So these are all the things. So this is about today's session, gentlemen. If you have any other questions or doubts related to today's session, you can ask me now. In the meantime, Mr. Suresh Kumar, in the beginning itself, he has asked for HDFC. So let us check what has been happening in HDFC. For that, let me open Dynamic Live. Apart from this, if you don't have any other questions, you can text me saying that there are no doubts. So in HDFC, you can see here, Mr. Suresh, the action says stay tuned for the next trade. It means there is no trade as of now. Wait, but then the preparation is telling you get ready to buy a put option. If the price manages to decrease further below this intra-week long signal, that is when it may ask you to buy a put option. But instead, if the price starts increasing and if it goes beyond this intraday 3 long signal, then it will tell you to buy a call option. So as of now, there is no trade. And Mr. Shivakumar wants to check Reliance. So there is a case of Reliance, you can see here. Now at this point in time, Reliance had told us to buy a put option. Now it is telling us to hold the put option. But when it told us to buy a put option, intraday 3 long was red in color, it was supporting. Intra-week long was green in color, it was not supporting. So we have to check the Tenkai signal. So if you're trading in Reliance, then Nifty will act as your Tenkai signal because Reliance is the #1 stock under Nifty. Now when did it tell us to buy a put option? It was at around 14 hours, 2 o'clock in the afternoon. It told us to buy a put option. Exactly at 2 o'clock, what was happening in Nifty? Let's have a look. So this is where the price of Nifty was. So at this point in time, you can see here there is no zigzag, there is no long signal edge point. Since there is nothing, then we would have went ahead and we would have done the trade. Now even if you have done this trade, you will wait here, wait until it very clearly tells you to exit put option in the case of Reliance. So until then you can hold on to your position. So you have to wait until it tells you exit put option. But once again, if it tells you exit put option and buy a call option, remember intraday 3 long is still in red. So even there you have to check the Tenkai signal before you do the trade. So this is about HDFC and Reliance, and this is about today's session. Any other questions or doubts? All right, looks like there are no doubts. So gentlemen, thank you all for joining today's session. Wish you all a happy trading and a very good evening. See you on the other side in the pre-market session tomorrow morning at 8:30. Until then, very good evening and thank you once again for joining this session.